I'm Kinsey Grant here at the NASDAQ market site with Leeny Oberg, the Chief Financial Officer of Marriott International. Thank you so much for joining me today.
Thanks, Kinsey. Good to see you.
So I want to get started here on a positive note. Marriott just beat Wall Street's expectations for earnings, and they grew something like 19 or 20% year over year. So what drove that growth?
Right. We had a terrific year in 2017. Starts at the top line, where our revenue line benefited from higher than expected revenue per available room, also known as same-store sales. So that helped on the fee line, as well as our incentive fees, where we share off the bottom line of hotel profits, where the strength of our margin growth drove some extra profits. Then also on the synergy line on our cost side, the expectations about what we'd be able to drive relative to the acquisition of Starwood, and we did a little bit better than was expected. And then last but certainly not least was our return of capital to shareholders, where we generated more cash than was expected and were able to buy back over $3 billion of shares.
Wow. Okay, so you have some really strong momentum moving into 2018.
Great year.
So, Wall Street kind of has this long-term expectation that you guys are going to continue to grow. How are you going to sustain that growth, and what are your tactics to kind of keep that momentum going forward?
Well, the biggest component of our top line growth is really around unit growth, is really growing our system of hotels around the world, our 30 brands, our 127 countries, and capitalizing and adding a lot more. And we've talked about our pipeline, which is really at 460,000 rooms, is a tremendous sign of the confidence that owners have in our ability to grow and to add more hotels. So that's first and foremost. On top of that, generally good economic conditions, which are helpful. And then the fact that the size and the scale that we've been able to have now with the Starwood acquisition, that being able to capitalize on that further, I think our early successes have given the investors some expectations and some view that we'll be able to do even more, which we're excited about.
Okay, so kind of speaking about this Starwood acquisition, do you have anything coming up on your M&A landscape, any deals that you're looking to make, or any even tuck-in acquisitions?
Well, that certainly was a big one. And I think from the kind of our history has been that we typically will do tuck-in, or as you describe, or bolt-on acquisitions, where it's either a certain geography or a certain brand segment that kind of is complementary to our portfolio. So I think while I wouldn't necessarily expect another Starwood anytime soon, we certainly always have our eyes open for unique opportunities in the M&A space.
Okay, so you said that you have a bunch of rooms coming down the pipeline, lots to look forward to here with Marriott. I know that you've expanded a lot internationally lately. Can you tell us a little bit more about the international expansion?
So if you think about the makeup, we traditionally are about roughly 65% in the US or in North America. And now when you look at our pipeline, we are actually over half of our pipeline is outside the US. And that really is a great tribute to being able to grow our brands outside the US across the spectrum of everything from Moxy, which is a tremendous limited service brand, one of our newer brands in Europe, to the St. Regis and the Ritz-Carlton all over Asia Pacific. So very excited about what we're able to do outside the US with a really strong pipeline.
Do you have any specific geographies where you're kind of focusing outside the US, or is it all over the place?
Oh, as Mr. Marriott loves to say, more is the answer.
I like that. So I have to ask, just given the developments we've had even these past 24 hours out of Washington, does the threat of a trade war ever register for you?
Well, at the end of the day, Kinsey, our business is driven by GDP growth. GDP growth in the markets where our hotels are. So when you think about in the US, is it going to affect economic growth in the US? That's really where it'll come to play. Okay. So I'd say it's too soon to tell, but obviously keeping an eye on that will be important.
Right. So also inflation. It's another big economic development we've been paying a lot of, especially this last couple of weeks, paying a lot of attention to. Do you ever see that as an issue for Marriott? Do you have to raise room rates, or how does that kind of affect your business?
Well, as you might imagine, when inflation goes up, typically so do our room rates. Okay. And that's not necessarily in and of itself, that's not a bad thing. I mean, we derive most of our fees off of the room revenues at our hotels, so that's actually good for fee growth. It gets back to this fundamental issue of the health of the economy and the growth. We're in year 9 of economic recovery. I think you see from some of the market volatility that consumers and investors are concerned about how long does this go on, but that is the biggest driver at the end of the day for us, is core economic growth in our markets.
I mean, we're closing in on, 3% economic growth. We've got a lot of great consumer spending data. I'm sure that works in your favor when people have more money to spend at the end of the month.
Absolutely. Both leisure and transient, we are, when you think in the US, we are probably roughly 70% of our business comes from business travel, and 30% comes from leisure. And so the core driving strength of those two segments will tell the tale.
All right, so I want to transition here to focus a little bit more on Marriott specific strategy. I know it doesn't look like it's rainy and cold here in New York today, but we are coming close to spring and summer, and I know that those are, I would assume, big travel months for families. So do you have any kind of special deals or promotions or anything you're looking forward to moving into these warmer months?
Always. There's no doubt that whether through our loyalty program, which is a really key component to our relationship with our customers and the value that we create, there are all kinds of SPG and Marriott Rewards opportunities to look for promotions, and you do see them, as you described, very often around kind of classic travel times. From a seasonality perspective, we typically are more even throughout the year, so you should look for promotions all the time.
Okay, so I am a millennial, and I know that we're a really important group for big corporations, big business, small business even. We're the largest generation, and we have started to tend to favor these experiences over having things. So how do you kind of cater to this millennial group? How do they factor into your business, and what is your strategy with this 18 to 34 bracket?
Well, you're absolutely right. They're really, really key component to our consumer group, and one of the best parts is because you are so young, i.e. the kind of hitting your max spend in hotels is, believe it or not, still ahead of you. Mm-hmm. So from that perspective, getting you into our system and in love with our rewards program, our co-brand credit cards, our hotels, and our various brands is really important. And as you've described, the experiential component of some of our brands, particularly in ones like Aloft or Moxie, Westin, brands like that, where are really appealing to the millennials, is where we find that we have great success in gaining market share and being attractive to that
Get
group.
them young and keep them for the rest of their lives, right?
We have many to offer.
Okay, so I want to kind of get your perspective here on the challenges you face. I know that there's been this boom lately in Airbnb, and we've got vacation rental by owner. How do you compete with these maybe non-traditional lodging options?
Well, for us, at the end of the day, it really does all start with loyalty. Being able to establish a relationship where you have a sense that we're making sure to provide you with real value, and also get to know you and know what you like and how you like your room, how you like your pillow, that if you come to us, you're going to find at 6,500 hotels in countries all over the world, you're going to find the experience that you want, and you're going to also have the benefit of a relationship with us through our loyalty program that makes sure that you're going to have the ability to access the experiences that you want.
Okay, so one last question here, ended on a high note. What are you most excited about moving forward? What's the biggest thing on your radar coming up for Marriott?
Well, I would say the most near-term excitement is about the harmonization of our loyalty programs. As you've probably seen, we recently had an announcement from one of our timeshare partners that we've come to agreement that now allows us to actually move forward with combining our loyalty program and our reservation systems. Mm-hmm. And being able to do that so that you have all the hotels in one place and all of the loyalty members kind of in one pot is incredibly exciting for the growth that we think we have to offer.
All right. Thank you so much for joining me, Leeny. It was a
pleasure.
pleasure.
Good to see you, Kinsey. Take care.